Another video, and in today's video I do want to give you guys a very simple method on how you can trade the Nasdaq 100 there as well. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis, and if you enjoy the video, a thumbs up would be appreciated there as well. Now special thank you to the members of the channel: Mr. Justin, Logan, Richard, Yazid, Mr. Jack, Hoshi, Andreas, Obaoke, Siambonga, Lungile, Tualesilia. I hope you guys are still enjoying the perks and services that you receive. And lastly, thank you to each and every one of you for the support. Now, if you think trading the Nasdaq is difficult, then I've got some news for you. It's not. It's actually very easy to trade. That's why people sell signals on them, because it's one of the easiest things to trade. Why do I say so? The Nasdaq normally trades sideways before the NY open, so either go up or it go down. That's why you see a lot of your favorite people that you look up to and think that they can trade because they call a buy and a sell before the Nasdaq opens. These guys, they trade on probability. Now I'll tell you, any person that you're currently paying for signals, there is 3 ways that they trade the Nasdaq at the same time. Now the Nasdaq consolidates before the market opens, whether you like it or not. They either will tell you based on what they think is going to happen. They are going to tell you have to, when they think the market's going up, they're going to tell you to buy at the bottom of the range of the market. That's now if they think the market's going to go up, right? And I'm saying they because you guys pay for people like this. So let's assume we're just going to use this. In fact, I've got a much better example. This over here is a consolidation market, right? This is a major consolidation market. This normally happens at high prices, right? You know, at previous structural levels, you can see there. Now the thing is, what happens is that these guys, they come into the market and they look and they wait for the market. Basically what they then do is, because price action will always stand, what they do is before the NY open, if they want you to buy, they're going to tell you to buy at this previous low, right? Where's your stop loss going to be? It's going to be there at the bottom. Now there's another way. If they want you to sell, or if they think the market is going to be a sell, then you know, they wait for the market to go and hit that level over there, and then they will tell you to sell with your stop loss there, which is exactly where I'm going to enter because I need that liquidity. That's 2 ways. Then there's a second way that they tell you how to trade. Basically what they do is they know the market moves sideways. They wait for a breakout confirmation. All of that resistance would then be turned support. They'll tell you to re-enter, and then boom, you basically ride the wave to the upside, not knowing that the Nasdaq has got a thing where it grabs liquidity, where it moves sideways, then grab liquidity from either ways, and then it starts moving into the direction that it is meant to go based off the fundamental data. Then the third way is, and which is the most funniest way, is, you know, using a trend line, and once there's a touch on the trend line, they'll tell you then, you have to buy base of that as well. And then someone that came up with a strategy which is known as the lollipop is basically, where the market, which is, I'm not going to explain that because it's just a break and retest that was named in a particular way to make it sound fancy. Now let me tell you, these are the things that you're being sold to at a price that is, that makes you think that it's actually worth, stepping into this market. No, it's not. So I'll give you an idea, and I'll show you exactly how this works. It's very easy. The first thing you need to understand is you need a price to buy to, okay, or you need a price to sell to. Now this all happens on the daily time frame. It's important that you understand where you want to buy to next. Now I'm not sure if you're a gambler or a person who scalps because you want to take a screenshot and post it on Instagram and tell the people how you killed the Nasdaq with your 100 pips. Now, I'm not sure if you're that kind of person. You have to make sure that you understand where you want to buy to and where you want to sell to. Now, you always want to sell to previous levels of support, and you always want to buy to previous levels of resistance. That's it. So you want to make sure that you buy low and you buy low and you sell high, and this is a good a good indication. And you can see, if you look left, the Nasdaq 100 is currently sitting at a strong level of support. This level over here acted as resistance. The market broke above that, came to test it as support multiple times. Now you can't just get into this market. So now you know, number one, you are correct, you are in bullish territory, right? Remember, there's two things: you get resistance, okay, and you get support. When the market is sitting at support, you can't just buy. When the market is sitting at resistance, you can't just sell, because yes, that's right to say that you can sell the market, because that's what basic price action traders do. Get in there, it's at support, so you buy. You need to wait for proper confirmation. Are you buying at the right in the right zone? Yes, you are. Why? Because you're buying the market in an area where there is bias, and bias is always at previous levels, or there's always bias at levels of support, because support is low prices, and they will always find sellers at levels of resistance, because that's high prices, and that's normally where these people would take their profits. Now you want to apply that same concept. With the time, or with the way that you enter. So to give you an example, you go on the daily time frame, right? And you go, okay, the Nasdaq is sitting at a level of support. Do I take the trade from here? No, I cannot take the trade from here, because there's no confirmation that I should be entering this trade. Now, remember, best places to buy, it is at support. What you want to do is drop down on a lower time frame, okay, and then you do exactly what your mentor does, right? You monitor the price on that time frame. It could be 1 hour, it could be 2 hours, it could be whatever hours, and you basically want to make sure that you get a clear break of structure. You can also look for bullish patterns in the market. So here you got an inverted head and shoulders pattern, you got an impulse correction, on the daily you're trading in bullish territory. So now that you are applying the same concept that you've used on the daily time frame, you are applying it on the 1 hour as well. Now from here, all you want to do is you want to wait for the confirmation break, and then on the retest, you want to then start looking for buying opportunities. Why? Because based off the daily time frame, you're buying at a strong structural level. So you want to apply that same concept coming onto the 1 hour, and you want to apply that same concept here as well, because you want to buy in the buyer's area and you want to sell in seller's area. Now let's assume that this was the high. Just to give you another example, okay, I sold the Nasdaq at that level, and most of you have seen it. If you have me on if you got me on Instagram, you'd have seen that sell, right? So basically this is a structural area, right? This is a level of support. It got broken, it became resistance. You go on the 1 hour time frame and you go and look at this level, right? Now you can see this was a structural level that the market came and visited, and you can see this market over here. Let me just do a 2 hour. Now you can firstly see how this market was trading sideways right there, and we had this move to the downside here as well. So I'm just going to use that, because that's kind of where the market that moved sideways, right? So we had that fake out to the downside. Let's go with that. So we had that fake out to the downside, liquidity grab thinking, and then we had that move to the upside there as well. So this is what I want to show you. There you can see that was a fake out, another fake out. The market then went back into that consolidation phase there, then broke out, came back, retested that previous level, and then started to move to the downside. Now, if you knew that you were at a structural level, right, which would have been here, remember, from a monthly perspective, this is the structural level, right? Basically, what you do now is you go on the 1 hour time frame. You're at a good price to sell, and you wait for a break, or a confirmation break. And what is that? This is it. So this would have been where the market had started. You then wait for the breakout, and then on the retest, you would have then got into this market right there. You put your stop loss above the monthly. About this monthly resistance basically where you were looking to enter. That's fine there. And then you basically you ride this wave to the downside. Now, where do you ride the wave to? To the next point of structure, which will be there. Why? Because this is now a previous level of resistance that is now acting as a level of support. So basically then you throw that wave down there, and you could have just basically scaled in your trade, and the members in the YouTube community will tell you we've basically took this entire sell to the downside. And that's basically how this thing works. What makes it easy for most of you is you've got me doing these analysis for you. So I do the research. All you basically do is you need to find, you just need to monitor the price. That's it. And look for that entry. Other than that, you always want to buy low, but you don't want to just buy. You want to drop down on a lower time frame, and then you want to start monitoring the price action from that level there as well. Now, again, this is not a holy grail. I don't trade 100% like this. I've got a set of rules that I do follow when I trade, but this is one of the easiest methods, and I can guarantee you the guy that you're currently paying 1,000, 2,000 Rand for is probably doing it this way as well. There's probably a lot of people who had took this buy on that wick, because if you go on a lower time frame, you would have probably seen this this year. So you'd have had that breakout and that retest, and and the market could easily just dip below that. So it's very important that you apply the same concept that you apply in the daily time frame, which is a wait for the level of resistance got broken, and it's now acting as a level of support there as well. So this is how you would then enter this market, but make sure that you do have proper confirmation from that perspective as well. And I'm not saying now go on every market and just go and enter. No, I'm saying that you have to make sure that you also have a set of rules that you need to follow there as well. So guys, this works like a bomb. I want to say thank you very much for your time, and please don't forget to check out the YouTube membership. What I do provide is perks that allows you to request 2 daily setups that I analyze for you, and I'll also give you 2 daily setups to trade on a daily basis as well. Thank you for your time, and as always, cheers for years.